now. Bitcoin's unchanged, and Ethereum and the GBTC are both up 8%. I expect that to continue. I don't expect Bitcoin to go down, but markets are about looking forward to dangling carrots of bullishness, and I see plenty in Bitcoin and Ethereum. There will be an ETF on Ethereum with futures. It's just a matter of time, and sometimes lawyers come up with really good lawyer speak and regulators, but this is an overwhelming tsunami now, and I fully expect it to happen. So it might come with futures, but to me the key thing is they got to get to the end game as soon as possible as an ETF that tracks an index, because they're picking winners. I mean, what if Ethereum is, you know, some of the killers win, Cardano or Solana? What if they who knows? I don't know. I fully am bullish Ethereum for becoming the money of the internet, and it's how you denominate NFTs and all of that stuff. And I'm very bullish Bitcoin because it's becoming the collateral of the world, digital, in a world going digital. But that could change. An index that tracks properly tracks indexes, an ETF that tracks this, is where the SEC should be going. I think they get that, and to get there, you got to try improve in your Ethereum futures ETF, and then maybe they'll skip past physical Bitcoin ETF and Ethereum ETFs, and maybe go straight to an ETF that tracks an index of a bunch of cryptos. To me, that would be ideal. That's the best way to serve investors, to protect investors. Check if that's what their true purpose is, rather than just saying it.
Yeah, you had a couple of really interesting notes actually in, or things I wanted to dig into here actually in your note. One particular line that kind of caught my eye. You said Ethereum looks like a similar threat to old guard finance as Bitcoin is to gold. Can you explain exactly what you mean by that?
It's revolutionizing the whole world of finance. So this concept of being able to transact dollars, 24/7, instant settlement, virtually zero cost, and earn interest. Crypto dollars earn interest on a token, on a blockchain, is revolutionizing finance. The world's going there, and it's been allowed because of Ethereum tokens. So, you know, you just got to respect. I mean, people realize from my conversations, I don't understand the technology so much. I'm a markets guy, and I see demand and adoption for Ethereum, and I see some competitors. But this is one thing I got wrong about a year ago. Almost 2 years ago, I wasn't as bullish Ethereum. And I did a podcast with, you probably know, Laura Shin, but like within minutes I'd completed that. It was like Ethereum just took off, and I started understanding it. But to me, it's one of those things that you respect success and respect demand. And I hear, and then what happened with the EIP 1559 protocol change, I was shocked. If you look at that supply, it was clearly heading lower, running around 4% annual for a year. Now it's half that, because they're burning tokens. So it's a classic example that they're just piggybacking off of the set code of Bitcoin, which is NGU technology. I love that term because the Bloomberg editors wouldn't let me use number go up. you can tell by the time of this conversation, I'm from the south side of Chicago. We watch the Bears, not the Bears. They've really grasped onto the NGU technology, number go up, by burning coins. And so for me, as a commodity strategist, supply going down, demand going up, adoption, price must go higher. Question of how you measure that price, overbought or oversold.
And how do you see institutional demand for ETH versus something like Bitcoin?
Well, the way I like to describe it is you can't hold gold anymore without Bitcoin. And now I look at it as you can't hold gold bonds without Bitcoin. You got to have some ETH in that space. It just, so here's part of me. First of all, I think you made me think about it now, because institutions, I get it, because they're all in finance. They see what's happening in their space and with DeFi, and all of us who've gone and been around for the last few years saw what happened to Blockbuster, saw what happened to Kodak, who did invent the digital camera. I mean, so what? And it's well orchestrated recent history. People get what's happening with digitalization. They've learned the lessons about not adopting and falling behind. So to me, that's what's happening in ETH. But it's part of where I focus a little bit more on the trees, on the forest, and stay away from the trees. And this is part of the reason I say is a properly managed index or ETF that tracks an index will be the better fit for the vast majority of institutions on the planet, pension funds, endowments, and sovereign wealth funds, family offices, you name it, to track an index like the S&P 500. Now, otherwise, they're picking stocks. To try to pick ETH or Solana or EOS 3 years ago is like, you know, EOS was going to be the ETH killer. Look what happened. There's so many of them. So that's where I focus on the index. That's where I see where it's going, and I'm not smart enough to pick out the winners. There's other people who can play that game, and to me, that's where I think our regulators are going to get it and see this is the best way. And I think most institutions say, okay, Bitcoin makes sense because it's digital collateral, it's great complement for bond portfolios, and you're not going to buy gold anymore. Why? I mean, you can't buy gold without adding some Bitcoin. So I'll add some Bitcoin to my portfolio. Your greater risk is not to. You got to add some ETH. So then what trickles down from there? Best thing is an index, and to me that's why we actually, it was BI, Bloomberg Intelligence, who suggested the Bloomberg Galaxy Crypto Index back in 2017, and I didn't expect it to be here, but now it makes a lot more sense. This is where this space is going. So those are just two. Yeah, they're the most significant.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Bitcoin ETH, and then look at, coin market cap. There's plenty of them that keep inching up. And you just want to be careful with things like Shiba Inu and Dogecoin. And I'm in Bloomberg Intelligence, and I'm a strategist. This is what I love here. I just write what I think. I get edited to check my English, and then make sure it's not something politically incorrect or something stupid that I don't do. I've learned that lesson the hard way. And then there's an index team, so I will trickle up to indexes. I've made suggestions to them, and I think the next big thing we will be talking about within the next 5 years are, how we have euro dollars, we will have crypto dollars, and I want to launch a crypto dollar index. So this concept of being able to earn interest in this space outside the actual U.S. dollar banking system, which is a bit above what you get in Fed funds. That's what euro dollars are. They're deposits in Europe that started dollars that started after World War II, most notably because the Soviet Union needed a place to put some of their money. It's happening in crypto dollars. And to me, that's just a matter of time. I want to make sure we create the proper index, and that's our indexing team. There's probably much more I should say about it, but from a Bloomberg Intelligence guy, that's my job, is to show, hey, index guy, this is what we should do. And whether you grab onto it or not, because this is where I think it's going. And you don't have to believe me or not, but I can't see that stopping. And I think the U.S. is smart enough to embrace it, crypto dollars, and then the whole thing trickles down there from there, Mike. I mean, we're dominating the world organically. 95% of all stable coins went to the dollar. Why?
I know.
Where is it going to go? Yeah, I just look at it's one of the best indicators of organic free market capitalism ever. And China is just like, oh my gosh, we are really falling behind. Well, for me, it's digging into the trees more than I want to. I'm bullish crypto, I'm bullish Bitcoin, Ethereum, and an index that properly tracks the market. And I've learned my lesson. I used to have hair of trying to figure out too much. I think the key thing to think about what's really happening this year is what happened when we launched this ETF at, it was basically October 18th. And the ETF that week of October 17th, beginning that Monday, was what's happened since then is Ethereum's outperformed Bitcoin, and GBTC has outperformed Bitcoin. They're just catching up. And I think what's happening is there's massive speculation in this space. Dogecoin is an example of that. It will have meet speed bumps. There will be flushes. Expect speculators to get their faces ripped off. Sorry, here's my sympathy for speculators. If you're over leveraged long and it's too much money, I'm from the trading pit. 20-to-1 leverage was standard normal in futures. And I've seen guys lose their jobs, get divorced, and commit suicide. But sorry, you took too much risk. It's always, and that's just going to happen. The unique thing that's happening, though, is for institutions, they will ignore this noise, and they will focus on what really matters. Low correlations to the market, better performance, enhance my total performance of my portfolio, reduce my risk. That will happen with Bitcoin and Ethereum mix, and it happens much better with an index that tracks maybe a top 10, depending on how it's managed. That's where we're going. Everything else is for speculators. Now, Solana, sure, okay, maybe it's better than ETH. It's better transactions. It does NFTs. Cardano doesn't. But that's a game that you're going to play with the pickers. Indexes is where it's going. So to me, I look at it like fully expect at some point this ability to, we're at 13,000 total on coinmarketcap.com. I mean, that's just ease of entry, too much supply. You know the rules of economics. Prices will not go up much longer. The unique thing about cryptos, they don't really go below zero. It's not like a stock that goes out of business. So I look at it as institutions, which is my focus, is let the traders beat themselves up. Institutions will focus on the bigger picture. Low correlation, enhanced returns, improve your Sharpe ratio, which means an index. And right now that's Bitcoin and Ethereum and maybe some of the other ones, but they're going to be very careful having to explain to a board of directors why you lost money on like a Solana. An index will alleviate that. That's where it's going. Sooner SEC can approve that, the better.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.